Well, welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. It's great to be back. Let's get the beers straight out there. This little number caught my eye for obvious reasons. Look at it. Like it's psychedelic. Body jar. 5 minutes away session haze. When punks attack brewers. Well, that must be the Big Shed Brewing Company, South Australia's finest. Let's crack it open. Not bad. It's a beer. That's a confirmation. So, tough times, especially for the people of the Ukraine. I mean, let's face it, Russian President Vladimir Putin using unthinkable 19th century tactics to solve a 21st century problem. To borrow from Angela Merkel. Very sad. But, as we also know, the situation has created even more uncertainty than was existing in global stock markets. So, as with you, the recent selling has bitten into our portfolio, but as we all know, we're in it for the long term. So let's put the market perspective, let's put, this recent selling into a bit of perspective. So don't worry, our portfolio is still up. So the bottom line is that although there has been selling, what we're seeing is a lot of buying as well. So people, as I've been talking about, people are selling out of these blue sky type stocks in the hunt for certainty. And what does certainty mean? Value. So how can we tell? Well, our own blue chip portfolio, which is out today, in today's issue of Blue Chip Value, shows that it's actually outperforming the S&P 200. So it's racing up, the performance charts. So you can see the stocks in today's issue. But, to give you an idea, the index might have declined 8% this year, but a lot of our stocks, AGL, BHP, Rio Tinto, the big banks, they're up. So are some of the smaller ones, that don't have that kind of market correlation. And I've mentioned them in the past. Playsight, Paragon Care, Quickstep. So, and we do have exposure to gold too. I'm happy with, Northern Star and Evolution. And these ones have been particularly strong for obvious reasons. So the key point is people are looking for earnings certainty. So what does that mean? That means dividends. And then what don't they like? They don't like blue sky. So what does that mean? Well, that was, most famously, with it certainly changed my perception of the market was when Facebook sold off 25% in a day. And that's unbelievable. Here we've got stocks like Appen that are getting hit hard. They're actually a client of Facebook's. So let's drill down a bit more into value because it's what we hunt for, so it's worth looking at in a bit of depth. So basically in the small cap region, we're looking for stocks that are growing earnings, but the valuations have to look reasonable. We don't like paying up for anything. So what we're looking for are quality earnings too, meaning cash flow. So and often that cash flow translates into dividends. That is even more so in the blue chips. Basically, I guess the whole value paradigm is you can't go past AGL because what AGL shows is that you don't even need earnings growth. You don't even need earnings growth to make money on the stock market. Now, why is that? Well, we saw AGL because it got sold down heavily and it had good cash flow. And importantly, so did big guys like Brookfield and Mike Cannon-Brookes. So we're all hunting. But I think 3 points need to be made. Firstly is that because there was such value on display, which we spotted late last year, the stock had halved in the space of a year. We since the buy recommendation we put on it in December, the stock's actually appreciated 50%. So what that shows is when you're buying value, because the stock's coming off a lower base, it doesn't take as much to get that appreciation. The hurdles are set very low because the stock market's all about expectation. So that brings me to the second point, because that's what our valuations reflect. Our valuations reflect cash flow, whereas clearly in the stock market, sentiment plays a big role. So sentiment can mean excessive exuberance or excessive pessimism. Obviously in AGL's case, it was excessive pessimism. In some of these, high-flying blue sky stocks, it was excessive optimism. So reversion to the mean is a big thing you look for as an investor or as an analyst. And third, I'm not saying that growth is bad. What I'm saying is growth is actually good, but what's lost in a growth environment is paying over the odds for that growth. So that happens for too long, and people play this momentum game, and then eventually the momentum trade falls over and there's value, and that's what's occurring now. And time again, history shows that buying in these times of value, you can reap much greater rewards than surfing that momentum for the reasons I described before. You're buying on a much lower base. So what you need is patience. You need the discipline, and that's where we can help you. So we've been looking literally at a lot of stocks, because we're in the middle of reporting season. So forgive me if I'm a bit all over the place, but we've been churning through lots of reports, lots of numbers, speaking to lots of management, and we are coming up with opportunities. But let's face it, we're in interesting times. And it reminds us today of interesting times we were in a couple of years ago, in early 2020 in March, when the market really hit the skids, when we had the first outbreak of the pandemic. Well, back then, we saw that the uncertainty was great, but the value on offer was even greater. And we said buy in small parcels. So that's what our advice is today. Don't be aggressive, just chip away, because let's look at what happened 2 years ago when we did that. We've had tremendous returns. Some of the returns, that really even surprised us. So what I'm telling you is, do your analysis, let us help you with that. But you have to be brave, and we're all in this together. So here's to Friday. Thank God we've made it. And, obviously we're very sorry about the people in Ukraine. Signing off for another week.